Good morning, everybody. It's Brian. Hope you're doing well today. I'm certainly feeling a lot better, so that's that's good for me. We're just going to go through the numbers real quickly and see what opportunities are there, both in futures and in forex. Before we get started, though, it's always important to have a quick look at the news. We want to know what news is coming up so that we can kind of know how to plan our day, plan our week. You'll notice if you go to your news calendar this week, there's a lot of high impact news on the calendar. Mr. Powell's speaking a couple of times. He's speaking today, along with the rest of the board, about the Community Reinvestment Act. He'll be talking on Tuesday, tomorrow, about the CARES Act, and then on Wednesday, he's going to talk about the impact of COVID on the economy. And along with those things, there's some other news in here. Manufacturing PMI is coming up. We've got, I thought I saw some other things. Manufacturing PMI is coming up. Powell's is testifying again on Thursday. So a lot of stuff going on this week. Who knows what that really means for directionality of the market? It doesn't matter. It doesn't matter what anyone thinks is going to happen. It doesn't matter what anyone hopes is going to happen. At the end of the day, all we can do is trade based on what we see quantifiably, the data that we see, and the direction that the market tells us. And as long as we stick to a process like that, we're consistent in our application of what we're doing. As I mentioned before, the wheels come off when we don't stick to a process, or we think we know more than the market, or we hold on to trades for longer than we should. And we do that when we're not trading a process, when we're not trading a plan. All of those other things creep in that cause us to make decisions that aren't in our best interest. So with that said, we want to see what the market's doing, have a plan for approaching the market. We're going to talk about what that plan is right now. So if we go over here to the forex side of things, and we bring up why isn't that showing up? We go over to forex and we have a quick look at what's happening in our currencies. We can see that dollar's pretty strong. It was strong Friday, strong Thursday as money flows out of the indexes and out of the stock market. Typically flows into the dollar. So if the dollar's strong, we typically see other markets falling. So right now we've seen other markets falling. And we'll get to that in just a minute. So what we're looking at here, we see that the yen and the USD are strong currencies coming into the new session. We've got the pound and the euro as weaker currencies here in the US session. Obviously, we can also see that the New Zealand and the Aussie are also weak, but I don't really concern myself too much with them during this part of the day, and I've explained why in previous videos. It just has to do with the fact that there's other things we can trade. There's other things that we can be looking at and trading that are actually being actively traded during this time, where their economies are open. So we want to look at the things that actually have some level of interest on them. Now, with that said, if we go over here and we have just a quick scan of the market, we can see a lot of the currency pairings that we might want to be looking at for the day have already moved quite a bit of their range. If we look at, let's say, the euro and the CAD, they're trading pretty much together here, but it's moved 77 pips. Its average is about 99, on the high end. So 90, 95 pips, is kind of its typical average. And we look across at others, we see that the euro yen, the pound CAD has moved 120 on 130 to 140, pound USD. So I look across here and I see that most of our currency pairings have already made fairly big moves for the day so far. Now, does it mean that they can't move more? Absolutely not. They could certainly continue to move, and I continue to reiterate that. But we look at laws of averages. What's the likelihood of that continuing on? And we go, the average is pretty close to where we've already moved for the day. I'd rather just step back and not participate in that condition, because you get kind of to the top of a range, it starts creating more opportunity for potential reversals than it does for continued continued runs. And if we're looking for a breakout where we've got some momentum going in the direction of the current trend, we'd want to see things continue on. So we'd want to have opportunity beyond where we currently are to move into the top of that range. And I just really don't see, where do we really have that opportunity to get that additional 20 pips out of it safely? And my mind says no. I'd rather just step back and be on the sidelines for that. So for forex, today is one of those days where I'm just going to step back and, as I said before, sit on my hands. Right? We're not going to do anything. We're not going to take any action. I'm not anyway. Now, if you have a little more of a risk tolerance and you want to look for opportunity out there, just watch the currencies that are currently being traded, that are active, have active open markets right now, and look for that divergence of strength and weakness. Find a currency that's strong and suddenly gives that burst stronger, and a currency that's weak and gives that burst weaker, and pair those together. Especially if you're kind of at the top of a range and they're going in the opposite direction of what it's been for the day. Let's say like right now, just throwing this out there, let's say the euro suddenly bursts up here to strength, and the CAD suddenly weakens, and now we've got kind of that pullback, where we'd be buying euros and selling CADs as opposed to what the other way around. So if that occurs, then that might give us the opportunity to get into something that might have that opportunity to run in another direction of where it's been. So there's going to be opportunity out there. There's always opportunity, but it just comes down to does it fit what your plan kind of dictates for it. So for forex, I'm gonna just say, hey, today I'm staying on the sidelines. I'm not gonna do anything with that. Popping over here to the future side of things, big moves over the course of last week. The bias is down. The 4-hour bias is down. The 30-minute bias is down. So on both of these, we've got short bias. So what does that tell us? Well, it tells us that we're looking for short trading opportunities. What does that look like to us? Well, it could look like a couple of things. We could see a pullback, into key areas as price begins to float back up. We could look for selling opportunities off of 3270, maybe even as high as 3300. So if we see the market really begin to pull back a bit, we could be selling off of these big whole number up here at 3300. The other way to look at it is watching for price to make higher lows and higher highs, higher lows and higher highs, and then trailing our entry point at the bottom of that previously closed higher low and waiting for the market to break back down through there. If it just keeps pushing up, it never fills us and we just stay out of the market, right? Friday was one of those examples where it just took off and never even gave us that opportunity to get in. So it just went. That happens. So we'd be looking for higher lows, higher highs, and then an entry on the break of that previously closed candle. Crude, we're in a mixed bias now. Crude pushed up higher and now has kind of turned that corner and it seems to be pushing lower again. The 4-hour bias is long, but the 30-minute bias is short. That tells us, hey, we don't really have a trade here. We don't have a confirmed directional bias. Let's leave that alone. We won't do anything until the bias is in the same direction. If this pushes up and we get a confirmed long bias, then we could look at long on the 30-minute to go higher. But right now it's a mixed bias. That tells us, hey, let's stay on the sidelines. We don't need to do anything because there's not definitive action in the marketplace. Gold is a short bias. Gold, the 4-hour is short, the 30-minute is short. That tells us we're looking for short trading opportunities. So as price pulls back, we've got a key level here at 1940 to be able to sell off of. You could even look as high as 1950 if it pushes back up here. 1950 could be an opportunity to sell from here on gold. So a couple of opportunities on gold and the S&P. We're keeping forex to ourselves right now. Crypto overnight sold off quite a bit and has pulled back. I think I don't even have the chart up right now. I think Bitcoin was down around 10.7 and a half, 10.8. So quite a bit off of where it had been. It was right around 11,000 The last few days it was kind of hovering around that 10.9 area up there. So, you know, all pullbacks always just give us opportunity. So, you know, don't freak out with market sell-offs like this, especially if you've got a plan that allows you to participate in the market in both directions. Just don't overthink it. You know, let the market do what the market's going to do and trade your plan. If you've got a plan that says, you know, we're going to go short, when our biases are telling us to be short, we're going to look for the pullbacks, be patient, and then short that market. And then as the market begins to turn, we're going to have mixed bias for a while. And that might mean we have to not take trades for a few days, maybe even for a week, maybe even for a couple of weeks, until the market sorts itself out and figures out maybe it's ready to move back up again. You know, so this is one of those things, just kind of get out of your own way. You know, I need that lesson often myself. Get out of your own way. Just do what the plan tells you to do, and everything else kind of flows in line and follows in line. It's when we start thinking we're smarter than the market, when we start trying to front run the market by anticipating what's going to come out of a certain event or how that event's going to be interpreted. We don't know. And I just have to keep saying this. No one on any news station or Twitter feed or anywhere else, no one else has any clue either. They're just paid to talk. They get paid to talk about what their opinion is. But their opinion is no more right or wrong than yours or mine. So have a plan and stick to the plan and trade your plan. That's what it all comes down to. You know, whether 10 people think the market's going to continue short and one person thinks it's going to go long, it doesn't matter. You know, it doesn't matter. That one guy that thinks it's going to go long could be the one that's right on this day. You know, so as long as you've got a plan that tells you what to do and you stick to that plan, and that plan gives you a mathematical advantage and it gives you a small edge on the market that's played out over the long term, everything else falls into place. That's all you have to worry about. So I'm going to leave it here and let you guys get on with your day. If we've got trade setups that come into play, we'll talk about those as at the end of the session this afternoon. All right, so that's it. Have a good day. Bye.